Welcome back, everyone, to the Future of Real Estate podcast. This is your host, Ellis Hammond, and today you have the privilege of hearing from one of the top 100 women in blockchain, one of the top 25 blockchain and crypto speakers across the world, Ms. Yael Tamar. Her company, she is CEO and co-founder of SolidBlock, and if you remember, SolidBlock actually was responsible for the first successful real estate tokenization venture called Aspen Point. You can actually see that on their website at solidblock.co. And today we talk about what is real estate tokenization, where she really sees the next decade going. We draw really similar parallels between the last 10 years in crowdfunding and what she believes the next 10 years in real estate tokenization and blockchain technology is going to bring for both passive and active real estate investors. You are going to find this a fascinating episode, as I did. So let's get into the show. Yeah, welcome to the Future Real Estate Show.
Thank you, Alice.
As we have the honor and the privilege of having her on our show today, just a couple things, and I've already read your bio, but pretty impressive. I'm excited just to understand even how you got into real estate and the blockchain. I mean, you are now of course, one of the founders of SolidBlock, a real estate tokenization company, but you're one of the probably most, I guess, asked 100, top 100 speakers around the blockchain and real estate, top 100 women in blockchain. So let's just go back a little bit, and I think this will be helpful for our audience too. What got you so excited or so involved in this space, in particular, real estate and the blockchain, or traditional assets in the blockchain, that you kind of built a real personal brand around? Hey, I'm one of the leaders in this space. What got you into this, and what makes you excited about this?
So I am coming to this industry with a traditional finance background, from Wall Street to M&A and private equity, and kind of working in traditional financial groups structuring funds of funds. So kind of as far as you can get from blockchain, essentially. But I had a turning point in 2016 when, in this essentially highly compliant environment, there was a money laundering incident in the group where I was working, and I decided, I'm done with this industry. And I opened a marketing agency, and I all of a sudden had to pay people overseas, or in general, pay people. So paying people is complicated, even if you have money to pay them, because there's payroll and taxes in general. And it got even more complicated with having employees all over the world, right? At some point, banks were not transferring money to certain parts in Africa, and PayPal was too expensive, and some of the employees didn't have a PayPal account. So I discovered Bitcoin as an option for payment, and my world changed because I just saw how easy it was once you understand, right? Once you open the wallet, once you kind of get them to open a wallet. In fact, they weren't, a lot of the employees weren't even using wallets. They were going to Bitcoin kiosks and stuff like that, and they were.
Back then, were you paying in Bitcoin? Like you were actually giving them, that you were exchanging Bitcoin as payment?
Yeah, exactly. And at that point, we were kind of worried about the volatility because there were no stable coins back then. And, we're kind of thinking, okay, what is the best time when we should do the transfer so that, then we don't expect the people to trade a lot, right? Because you were thinking about these risks. But still, it was better than going and standing in a line in MoneyGram and, withdrawing cash from my bank here, and just, it was so tedious. And then I was wondering what was this technology behind it. And, working in this highly regulated environment, I wasn't really paying attention to crypto until then. And so I discovered blockchain and that it can be used for many different things. So I just repurposed my marketing agency toward blockchain transformation agency. And we worked with a variety of kind of companies, enterprises, working blockchain into their operation. And then during the kind of the year of the ICOs, I ended up working with quite a few ICOs and marketing and strategic marketing. the more successful ones and the ones that are still going, you know. So that's how I got to the space. And the real estate component of it, I was always interested in real estate on a more amateur level, you know, as an investor in single family homes. And also when I was structuring products, we did structure quite a few real estate funds, and as like a component, there was always a REIT, you know, or public, you know, some sort of a public real estate driven fund, you know, because it's for diversification reasons, right? And we were structuring those. So I was always interested in this asset class. And when I was you know, I had a few startups here and there throughout from 2010 until 2018, and then I decided in 2018 that it was time again to, you know, go back and create my own business that's a tech business rather than a consulting business, even though I built a pretty successful marketing strategic consulting agency. But I wanted to do a tech startup because I felt like, you know, blockchain now is the opportunity, right? Because it was, you know, back in 2018, you know, there was so much VC funding everywhere, right? So I created a company similar to SolidBlock, and which was meant to put real estate on the blockchain. Why real estate? Because I felt it was the industry that needed liquidity the most, or that needed transformation the most, having not transformed in many, many years. You know, real estate investment pretty much looks the same as it did 50 years ago, or looked the same. Now it's a little different. And then I discovered SolidBlock when I was looking through the competitors in the industry, and it appeared that my co-founder, my now co-founder, lived not so far from me, now, you know, an hour away in Israel, which was it was a coincidence because the project was in the U.S. And so we created this partnership and this company that's been quite successful to this day.
And so one of your first deals was the Aspen,
right?
Point, right?
Aspen Point. Mm-hmm.
So guys,
Yeah.
we've actually talked about the Aspen Point a couple of times on the show before, so I would say most people are familiar with that. If you're not, go look up that project. But I mean, what was it like to do? Is that considered the first ever tokenized real estate deal? I mean, would that really be the first? I mean, tell me a little bit.
Yeah, probably the first successful one that ended up raising the funds, right? So where the smart contract was actually, you know, where it was actually issued, right? The token was actually issued. It was distributed to the wallets of the individuals that passed the compliance checks. So that was the innovation behind that token in general. Like now it's a no-brainer, right? The whole KYC, AML, and accreditation. But back then, it was the time when you had utility tokens, and there was not a lot of compliance back then, right? So we had to build
It's not like, I mean, even though crypto was widely known, it wasn't as widely known as it is today, right? It's not like all over the news.
Yeah, the crypto wasn't widely known, and also the majority of the transfers were kind of, you know, these over-the-counter transfers or on an exchange still, but you know, just for the transfer of tokens that represented a part of something, usually, you know, utility tokens at that point, you didn't need to undergo KYC, AML, or accreditation, right? It was wallet to wallet. So we were tasked with SolidBlock, essentially was contacted and contracted by Elevated Returns, the issuer in the property, and all credit goes to them, of course, for even kind of attempting. They were really the first that issued, you know, the token. We tokenized, we minted the token. So we created the smart contract that not only facilitated first of all, facilitated the record of ownership in the books and records, right? So normally that's done through an SPV, a special purpose vehicle, a company that was created in Delaware, Aspen Digital Inc., that received the right to distribute basically essentially shares to investors, and that company held almost 20% of the assets equity. Now the shares themselves of that company, basically the ownership of those shares was recorded on the blockchain through our smart contract. And not only that, before anybody could even buy this token, before that token would be transferred to their wallet, they would need to get on an allow list, on this list of allowed wallets, wallet numbers. And to get on that list, they had to pass KYC, ML, and accreditation. And that was the innovation at the time, right? We used an ERC, what's called an ERC20 token standard with a whitelist capability. And so that was the first, essentially the first asset that was tokenized and raised $18 million. Again, elevated returns and also Indiegogo's micro ventures mainly raised those funds. So that was very successful. It's still a very successful project. You can see it trading on the T0 exchange.
Yeah, I see that on your website still today. So that's just on your marketplace where people can sell their tokens essentially, or trade their shares of that deal on your.
Yeah, essentially we send people straight to T0 because right now that's where you can buy and sell the tokens on that exchange.
Interesting. So, all right, a couple things I wanted to do with the rest of our time. I want to zoom out a little bit and what we were talking about before the show, just the opportunity I think that is out there, and kind of why you think people should be excited and paying attention to this. I mean, this show was early, I feel like, in some ways, in that it's hard to even get people to kind of wrap their minds around like where this industry is going. So I would love just to kind of invite you to share with our audience like why the opportunity that lays out there for real estate investors, and kind of how we can partner together. And then I'd love to just spend some time talking about, one, as an operator, what we can do now with SolidBlock or just the blockchain in general to make our offerings more accessible, or what the steps that maybe we can begin learning about implementing. And then as a passive investor, ending there of kind of like what the dream of what this could ultimately be like. Because right now there's clearly some hurdles of folks not, of getting to that point where this is streamlined and people are using this. So that's kind of where I want to go, if that's okay, over the next time we have together. So let's back up and just ask you that question. I mean, the opportunity, we talk about real estate being, one of the largest asset classes, I mean, in our country, right? I mean, we talk about crypto.
One of the largest in the world. Yeah, that's still, because everybody needs a house, right? A place to work, a place to shop. So
crypto's pretty small in that regard.
But let's talk about just the opportunity that you see out there, and why folks listening today should really be paying attention to the blockchain.
Yeah. Well, number one is the blockchain itself, or now we kind of dropped D and we're talking about blockchain. Blockchain itself is used by almost every institution, almost every bank, and it's used behind the scenes. Just kind of the internet is ubiquitous. You can't even think about some business not using the internet. I don't know if there are any businesses nowadays that don't use the internet at all. Like, so everybody has at least a Facebook page or something like that, right? Even in remote emerging economies.
Right.
But the difference between the internet and blockchain is that internet is also a B2C application protocol, and blockchain is largely B2B, right? So for on the B2C front, this is really people using cryptocurrencies. Although I should say, at least in the United States, a very, very large number of people hold cryptocurrencies, and you may not even know it because the pension funds are now, or the investment banks are now holding cryptocurrencies, right? As a part of that. Or at least they're holding ETFs that are holding corporations and companies like Tesla holding cryptocurrencies, right? So indirectly, almost everybody is touching crypto as an asset class. So they are touching blockchain, which is basically the protocol I would say, or the tech rails that enable crypto, right? So most people around us may not realize, when they are using blockchain, because even banks now are using blockchain for interbank asset transfer, right? Transfer agents are using blockchain to transfer shares and so on. So blockchain is used widely around us by companies and institutions and governments as well. So blockchain is now penetrated, I would say, the mainstream. So, and in terms of cryptocurrencies and just an ability to trade either to trade or hold highly liquid assets that are secured via some cryptographic mechanism like cryptocurrencies, but that is decentralized in a way, is going to take a little bit of time, but it's going to go mainstream as well. And it's going to be even more important now that when the high inflationary environment when people mistrust their government more and more and so on and so forth. But that's for another podcast. Now, why is this relevant to anybody in the real estate world? So just as you can trade cryptocurrencies, you can use the blockchain to transfer real estate. You can transfer real estate from a person to person, from wallet to wallet, and during the sales process. You can also buy fractional real estate where your ownership is written on the blockchain. And if your ownership is written on the blockchain, it's easy for you to trade it later, either wallet to wallet or on an exchange. And that process of putting real estate on the blockchain, fractional real estate on the blockchain, is called tokenization. And that's what SolidBlock does. Why is this interesting to both sides? So let's talk about the asset owners or operators. Yeah, so let's talk about the asset owners and why they benefit from it, and investors, like you said, passive investors, why they benefit from it. From the passive investor point of view, they need liquidity, because otherwise their investments are stuck for 3 to 5 years and they can't take them out, right? They're at the mercy of the asset owner for them to refinance or sell to get their investment back. And so liquidity really helps a lot of people that don't want to, keep their money in a highly illiquid asset. And this is even more interesting now because as you see, the stock market right now is crashing. And there's very little disposable income. And this is where disposable income goes. It goes into liquid, it goes into more liquid securities, right? So, and when the time comes, you kind of take your money out of the stock market and you put it towards basically living expenses, right? A lot of people are losing jobs and life is becoming more and more expensive. Real estate has traditionally been an asset class that, number one, retains its value pretty well because it's always increasing. The population is increasing, so you need more real estate, you need more places to live. A lot of countries are now in trouble because they don't have housing for people, right? So real estate is a different asset class that is scarce because just you can't even build at the same speed as the population. And the second thing about real estate is that it's used as an asset that can be leveraged, right? So if somebody needs liquidity, again, to continue living, right, in the inflationary environment, or they need to invest in their business more, right? So there's a liquidity risk in general for business owners, and they can use real estate to leverage that risk by borrowing money during the time when they need extra liquidity, right? So that's why real estate is great. But on the other hand, real estate is something that is pretty sticky. It takes time to buy and sell. So tokenization and blockchain is allowing the middle ground for that. You can tokenize the asset, and then by tokenizing the asset, you get access to the blockchain economy. So a whole new economy of lending and borrowing against digital assets. So in this case, it would be a digital security because it's a security if it's an asset that you invest in for the purpose of income generation, capital gain, right? Once this security comes in a digital form, there are a lot of lenders and borrowers that will quickly put that security in the vault, in the wallet. It's easy to lock it. You don't have to issue a lien against it necessarily, right? And so that's basically an equivalent. You put it in a vault and lock it, and then when the time comes, you can lend against it. And if there is a non-payment of interest, then obviously that security
is that vault like a cold storage kind of key, or is that a vault that you could have like on your platform, like what I'm saying? Like, 'cause I think that would be a worry for investors is. Yeah. If my ownership is in this coin or token, I've heard all these horror stories of me forgetting my password. How do I ever get access to that? So what does that look like?
So actually, that's a valid point. And for the purpose of lending, actually, they're custodians that do this. So the lenders or service providers to the lenders, they will lock it in a vault. Like you'll transfer your security to a different place. And sometimes there are actually protocols that you can, the beauty about the blockchain is that it's like building blocks. You can connect. So I don't know how many people here are crypto savvy and have used the MetaMask. So when you go to different exchanges or websites or even private chats, or NFT marketplaces, it's so easy. You just connect to your wallet and there's your money. And there also a bunch of your assets and NFTs are sitting in the same wallet. So it's literally it's almost like paying with your credit card, but you don't have to actually enter your credit card every single time. You connect your wallet, you pay, right? Or you can authenticate yourself through the wallet very easily on the site. So you don't have to remember a bunch of passwords, right? So that said, so that makes things easier, right? So you can actually connect it to a certain protocol and they will lock your money or your assets and then lend you money against them, right? In terms of the losing of the keys of that said MetaMask wallet or any other wallet on any, on decentralized platform, it's complicated. You really cannot recover those keys. So as far as any valuable NFTs are concerned, for example, like Bored Apes or whatever people are buying, in general, it's especially if it's very, very valuable, I would store that in a different wallet. I use a lot of centralized exchanges with centralized wallets for crypto, just because I cannot trust myself not to lose the password. So I prefer.
I'm the same way. I bought a cold storage. I'm like, this is actually more risky. Like, there's no way I'm gonna remember all of this or remember where I put this.
Some people are more organized than others, and some people have safes. You just write down the numbers or the passwords, and then people also diversify their strategy and they put crypto in different places, right? You have some here, some there, some everywhere, right?
Right.
But for me, I have a few exchanges that I trust. One in Israel that highly unlikely that the money would get lost because Israel is very tough compliance wise, and then Coinbase and Kraken and those exchanges. So in terms of our platform on SolidBlock, we recognize that real estate investors are not necessarily coming from the crypto space. So it was important for us to actually integrate a wallet and have a holistic experience. That a wallet that doesn't even feel or look like a wallet. It's just basically a website where a platform where you go and you buy real estate and you can see it there and you can trade it, basically on a very authentic and holistic experience.
Right. Let me ask you this though: what is the biggest hurdle then? Because when I hear about this and the opportunity to, I guess it seems like a no-brainer. It creates liquidity for your investors. There's smart contracts which allow you to kind of track shares and maybe breeze through some of the kind of technical paperwork and stuff that's always been with creating shares and subscriptions. What is then, like, in your mind, the next hurdle to really mainstream more of this? For why I guess the first question is, how much activity is there right now? Like, how many offerings is SolidBlock doing this year? And what do you think it's going to take for this to really become more mainstream, where this is like, where Crowdstreet, for example, one of the biggest online platforms for crowdfunding here in the United States, is tokenizing real estate shares?
Number one, the tokenization wave has really started this year, and I've seen so many successful projects. And I feel like that, 2022 really has come strong. SolidBlock is now working on about 10 projects, and we have dozens in the pipeline. And a lot of the projects we're working on are more white label models where actually the issuer is issuing an offering on their own website. On our marketplace, you can see the projects where we participated as a partner, as a general partner, and it is essentially our offering. And so those are projects we looked at, we vetted, did due diligence on, and so on. And the other projects were basically using our technology to allow issuers to access their investor pool. So they don't need to be on our marketplace. And so basically where the industry is going really is to allow developers, institutions, or anybody with assets to create basically, number one, the market for their asset that they didn't have before. Number two, to provide liquidity, of course, for investors. And number three, to provide opportunities for themselves to reduce liquidity risk and also to leverage their assets to gain different type of financing.
So give me time. Like, Elon Musk always likes to say, "Oh, it'll be a year," but then it's 3 years. Like, what's your prediction that, let's take CrowdStreet example they're a really well-known company, right? That they're like, "Hey, we're adopting kind of blockchain DeFi, and offering, we're going to tokenize shares in that regard."
Yeah. So, all of these companies are actually looking into tokenization. But just like any other company that's scaling and growing really fast, like for them to be able to stop and kind of implement new technology, it's complicated, right?
Right.
Crowdstreet is about 10 years old. So, and it's very successful, of course, right? But now, kind of in its 10th year, you can see a lot of deal flow, right? So they've done almost 500 deals, right? In the 10 or maybe 9-10 years, right? So that's a lot of deals. That's a lot. Well, that's basically the number of offerings. I don't know what is the number of successful offerings technically. Right. So, but that's over 50 deals a year, and that's really successful. But the majority of the deals were done in the recent years, right? So it takes time to kind of gain the market share. And they were founded at about the same time the other crowdfunding platforms were founded. Why? Because around that year, 2012, 2013, there was something called the Jobs Act. And it was government's initiative to allow small, medium enterprises, number one, to trade their securities. And that's also which gave rise to our industry, the tokenization. But it took a little bit of time for our industries because there was no good technology that allowed the trading to happen faster and in a frictionless manner. So there were some alternative trading systems that started facilitating the trade, but then you really had to get a transfer agent involved. And then, there was literally a phone call that needed to happen between the buyer and the seller, or, documentation and like a handover, by the ATS. With blockchain, all of that is kind of cut. You do this in seconds, right? But then the other thing in the Jobs Act was the crowdfunding, the ability for any company to go out and raise $1 million. Back then it was $1 million, now it's 5. But back then it was $1 million to raise $1 million from retail investors, from anybody without a prospectus. So that was a revolution, right? That gave rise to this whole crowdfunding industry. But the crowdfunding industry, to give the truth, is still relatively small because the tickets are very small. The tickets are somewhere in the region of $200, $300 per investor. So even if you have a large number of investors, it's still a pretty small market. Now, tokenization actually allows us to bring unlimited amount of money from more sophisticated investors, and with certain regulation, like up to $75 million from retail. That's called Reg A plus regulation. So we can also use crowdfunding as a vehicle and raise up to 5 million and tokenize on the back end. So crowdfunding has been around for 10 years. It's created a lot of a good market, right? So, but that market is probably saturated right now, to tell you the truth. So they need to innovate, right? So these companies need to innovate.
Do you think, like, from a user standpoint, like there will be, how far are we from, I can log on to our investor portal or CrowdStreet investor portal or whoever and connect my MetaMask wallet, and within a few minutes purchase shares of real estate deals? And I don't know how fast it is on your platform. I've actually never done it, but I'm like, I think that's where, when I think about, and Michael Flight's a good buddy of mine. We know, him as well. That's what we talk about, like where this begins to get adopted, where it's almost like you don't really realize you're kind of on the blockchain. Like it's it's so easy where it's like you connect, you deposit money, and you can own, that's where it's almost like we kind of have to get rid of the crypto lingo. It's like, how far are we from that where it's just so streamlined where someone can come into our portal, connect MetaMask wallet, instantly, subscribe or purchase a share of real estate, and then we're on to the next thing?
Let's talk about, it's a great question. And to tell you the truth, I've never really looked into it from a scientific perspective. But let's look again at the real estate crowdfunding market, which was non-existent, right, prior to the early 2010s, right? Now, about 10 years later, it's at the size, well, I don't know about the US market, but the global size is around 10 billion, which is not too much, right? But still, like almost everybody has gone on one of those websites and bought, like people that are into investing. Most people I know who invest in stocks will probably also bought something on Crowdstreet, right? Or Yield Street or Cadre or something like that, right? So invested a small amount of money. And it's pretty much mainstream, right? So people know how that works. They log in, they feel comfortable enough to invest a few $1,000s in an asset. Now, in terms of tokenized real estate, number one, I'm pretty sure that all of these platforms in another year or two are going to implement tokenization. So anybody who's investing through one of these platforms will be able to trade as well. And in terms of other platforms like SolidBlock, where wallets are inherent, right? So you don't have to learn how to do MetaMask. If you're a crypto user, you probably will buy some sort of real estate product in the next year or two, as long as the rates are kind of on par and comparable to what you can get from, let's say, staking stable coins or cryptocurrencies, which have historically been rather high and even exceeded real estate. In fact, there was a report from one of the top investment banks, I don't remember, it was JP Morgan or Morgan Stanley yesterday, that crypto has surpassed real estate as an alternative asset class, right? Which means
in what regard?
In basically parking your money. Alternative asset class. So they're traditional asset classes like stocks and bonds, and mainly like government bonds or fixed income instruments, some sort of loans that you get 8%, right? And then there's alternative investment class, and some of that is real estate, venture funding and stuff like that, right? So people stopped investing in real estate so much because the returns are not as attractive as crypto was. So it might change a little bit now, but that's basically the fact. So so at the end of the day, what I think will happen, so the crowdfunding market, it took about 10 years to kind of go mainstream, right? The real estate crowdfunding market. And now I think we're, for the tokenized real estate, so the Aspen Point was in 2018. So we're about 4 years in, and don't forget, COVID was in the middle. So nothing happened literally in 2019. Sorry, in 2020, nothing happened in 2020. In 2021 was also a slow year. So in these 4 years really is two and a half, right? So I think we're probably about 5 more years into the making of this market, where people, again, I'm not sure that they will connect MetaMask wallets or some sort of wallets they have. By the way, banks will offer them wallets, right? So imagine that you have a Bank of America. Let's say you're with Bank of America. You have a Bank of America wallet. They act as a custodian of your crypto and of your assets, and they also store your password, so you don't have to worry about it. But then you can also connect that wallet, and maybe even MetaMask will, or one of those wallets that have a universal connectivity, will partner with banks and will create branded wallets that you can still connect easily everywhere. So you will go to a SolidBlock website, connect your Bank of America wallet. You will buy you will buy real estate backed securities. You will pay with crypto, or maybe you'll even pay with fiat from your account, right? That generally now a lot of the fiat transfers, by the way, fiat is regular money like dollars and so on. A lot of the transfers are done using crypto. So they will just convert your fiat to crypto at the entrance and then send it in, because it's better, it's easier and cheaper to send places. So that's how I envision the world. That you'll have a wallet from your bank, you will go and you'll connect. to a platform like SolidBlock. You'll buy real estate because you need to park your money somewhere. And then once you have this real estate, you go out and you get a loan, maybe from another bank, right? From some sort of a DeFi bank or maybe even traditional bank, and you'll collateralize that asset.
So I was just looking at that too, by the way. Yes, JP Morgan is the one who said that essentially digital assets have replaced real estate as the preferred alternative asset class. Not that I don't know exactly kind of what that language means, but yeah, that's kind of crazy. I guess I don't know if that's sentiment or if that's going to be actual monetary dollars, but that's pretty significant that they're making that statement for sure.
Yes. And they know, right? Because how much money are they managing?
Yeah,
Trillions.
Yeah, that's a strong statement for for a banking institution like that. So that's pretty.
And especially if, again, I don't remember which one. I frequently confuse the two just because the names are JP Morgan, Morgan Stanley, you know. Yeah. Anyway, so one there, or maybe all of these ex CEOs or maybe even current CEOs 10 years ago were, or maybe even 5 years ago, was so vehemently against crypto.
Yeah,
and
everyone was. Real estate, everyone was, because you don't understand it, you know, and so wow, that's fascinating. Well, I just say this, I'm so glad to kind of have, know you now and be able to follow you and see what you're doing. It's exciting that you're kind of moving this industry forward. And so grateful for all your work and the work over at SolidBlock, and really excited to see just the the reality is, like, it's true. I mean, we deal with money every day. We provide shares, passive shares to real estate investors, and it's difficult and it's challenging, and it's really, in a lot of ways there's reason for that. But when you're in a day and age that we're in today, it should be easier, and it should get easier, and it should be more safe. I mean, and absolutely. And so that's why I say I appreciate your work in that, because I know that we'll benefit from that very soon. And hopefully shows like this and, conferences that we do together can help continue to spur on more new technology. So thank you for everything. Where can people get to know you or follow your journey or even learn more about SolidBlock?
Yeah, well, of course, on our website, but we pride ourselves, or we feel it's necessary to educate the market in every way possible. So we have also a podcast called Block Solid everywhere, Apple Podcasts or Spotify, and you can also find it on our website with videos. And we have a course on Tokenization 101. We have a big library of videos specifically on even DeFi and Metaverse, anything surrounding real estate, of course, with a real estate angle to it. And obviously Twitter, follow us on Twitter for any news and all of these resources.
Yeah, you gave us a link for the course, so I will drop that in our show notes down below too, so people can find it. That was a really cool kind of streamlined way to really understand. If you're like, here, what the heck is tokenization still? What the heck is blockchain? How does this all apply? I think that's a really good resource. So I'll be very happy to drop that down below.
Amazing. And thanks for having me, Ellis. It's been really nice to chat.
Yeah, as always, I do this show honestly because I want to learn. It's like, this seems inevitable, and it's like the reason I started the show was, well, I don't want to be left out of the conversation, and I feel like I owe that to our investors as well. So, anyways, thank you so much, and I look forward to hopefully seeing you in person at a future blockchain real estate conference.
Amazing. All right, Ellis, have a great night.
Thanks, everyone. We'll talk soon.